Delinquent FBAR submission procedures, who qualifies, how it works, and what to do if it doesn't apply to you. Here's a scenario I see all the time. Someone is sitting across from me, totally stressed out, and they say, I just found out I was supposed to be filing something called an FBAR, and I've had a foreign bank account for years. Am I in serious trouble? And my answer is always, well, it depends. But for a lot of people in exactly that situation, there's actually a clear, legitimate path to getting caught up, potentially without paying a single dollar in penalties. Today, I'm going to walk you through the program called the Delinquent FBAR Submission Procedures, who it's designed for, who it's not designed for, and what your options are if it doesn't fit your situation. If you've got a foreign bank account and you're not sure whether you've been filing correctly, stay with me because this could matter a lot for you. What is an FBAR and why does it matter? Let's start with the basics because if you're new to this, the acronym alone can be intimidating. FBAR, FBAR stands for Foreign Bank Account Report. The official form is FinCEN Form 114 or 114, and it's filed with the Financial Crimes Enforcement Network, not the IRS, though the IRS is the one that enforces it. The rule is straightforward. If you're a U.S. person, a citizen, a green card holder, or someone who meets the residency test, and at any point during the calendar year, the combined value of all your foreign financial accounts exceeds $10,000, you're required to file an FBAR for that year. Notice, I said at any point during the year. It doesn't have to be a year-end balance. If your account hit $10,001 in July and then dropped back down, that year still triggers the filing requirement. The penalties for not filing can be severe. Non-willful violations, meaning you generally didn't even know, can bring penalties up to $16,000 per violation. Willful violations, where the IRS decides you knew and ignored the requirement, can reach the greater of $150,000 or 50% of the account balance per violation. And there's also potential criminal penalties in egregious cases. So yes, the IRS takes this seriously, but the good news is if you've made an honest mistake, there are programs designed specifically to help you fix it. What are the delinquent FBAR submission procedures? The delinquent FBAR submission procedures, I'll just call them the DFSP for short, are essentially the IRS's way of saying, look, if you've missed your FBARs, but you did everything else right, come forward and we'll work with you. This program is built for a very specific type of person. You missed filing your FBARs, maybe for 1 year, maybe for several, but you did report all your foreign income on your US tax returns. You paid the taxes you owed. And the IRS hasn't reached out to you about any of this yet. Usually they do that in the form of a letter. If that's you, this program could allow you to get fully compliant without facing FBAR penalties at all. There are 3 core eligibility requirements, and all 3 have to be true for you. Number 1, you haven't filed the FBARs that were required of you. 2, you are not currently under a civil examination or a criminal investigation by the IRS. And 3, the IRS has not already contacted you about the missing FBARs. That third one is absolutely critical. The moment the IRS reaches out, whether it's a letter about a delinquent return or a notice of an exam, the door to this program slams shut. The window of opportunity is before they come to you. That's why if you're in this situation, time does matter. The key disqualifier, unreported income. Now, here's where I need to pump the brakes because this is the most common misconception I'm seeing. The DFSP is specifically for people who filed their taxes correctly. They reported all their foreign income, but just forgot to or didn't know they had to file the separate FBAR form. If you also have unreported foreign income, meaning income from that foreign account that never made it onto your tax return, like interest, this program is not for you. Stop. Not for you. Stop. And why? Because the penalty waiver under the DFSP is contingent on the IRS being able to confirm that your income was already properly reported and those taxes were paid. If there's unreported income in the mix, you're in a different situation that requires a different solution. In that case, you'd be likely looking at the streamlined filing compliance procedures, either the domestic or the foreign version, or possibly a reasonable cause submission. And we'll come back to those in just a minute. The penalty waiver, how it works. So, what exactly does potentially no penalties actually mean in practice? If you meet all the eligibility requirements, you file your delinquent FBARs electronically through FinCEN's BSAE filing system, and you include a statement explaining why the filings are late, this is called a reasonable cause statement. It's your explanation of what happened, written clearly and honestly. The IRS states it will not impose FBAR penalties when you've properly reported all income, you've paid your taxes, and you haven't been previously contacted about an examination or delinquent returns. And that's important to remember. Your FBARs may still be reviewed. The IRS can select any return for examination through its normal audit process, but you're not walking in with a target on your back. You're coming in voluntarily, doing the right thing, and the program acknowledges that. Unlike a practical note, you'll generally need to file up to 6 years of delinquent FBARs because that's the statute of limitations window the IRS looks at for these violations. Real world scenarios, who qualifies and who doesn't? Let me paint a few pictures to make these concepts concrete. Scenario number one, this is the classic DFSP case. Maria is a US citizen who inherited a savings account in Portugal from her grandmother 10 years ago. The account holds about $40,000. She reported the interest income on her US tax returns every year, paid the taxes on it, but had no idea she was also supposed to file separate FBARs. She never heard from the IRS about it. Maria likely qualifies for the DFSP. She can file her missing FBARs, explain the situation, and quite possibly walk away with zero penalties. Scenario two, doesn't qualify because of unreported income. David lived in Germany for 3 years and had a local bank account. He didn't file FBARs, and he also didn't report the interest income on his US returns because he didn't realize US citizens are taxed on worldwide income. Common mistake, right? David cannot use the DFSP because his tax returns weren't complete. His most likely path is the streamlined foreign offshore procedures, which still offer significant relief. They offer total penalty relief, but that's a totally different program. Scenario three, IRS contact has already happened. Susan gets a letter from the IRS last month asking why she hasn't filed FBARs for the past few years. She has no reported income, but that letter disqualifies her from the DFSP. At this point, she needs an attorney to help her respond strategically because the situation requires a different approach. Scenario four, the willfulness question. Tom had a foreign account with significant funds that he kept completely off the books, right? No FBAR, no income reported, deliberately concealed. Tom is not a candidate for any of these voluntary disclosure programs. His situation potentially involves willful conduct, and he'd need to look seriously at the IRS criminal investigation voluntary disclosure practice. And he needs an experienced tax attorney immediately. Other programs available if DFSP isn't a fit. If the DFSP doesn't apply to you, you're not shit out of luck. Here's a map. Streamlined Domestic Offshore Procedures, SDOP. This is for U.S. residents with unreported foreign income whose conduct was not willful. You file 3 years of amended returns, 6 years of FBARs, and pay a one-time 5% miscellaneous penalty on your highest account balances. Compared to full penalty exposure, this can be a significant savings. The Streamlined Foreign Offshore Procedures, SFOP, is for taxpayers who are living outside the U.S. and meet specific residency tests. The structure is similar to the domestic version, but the 5% penalty is totally waived entirely. This is often the preferred route for expats. Delinquent International Information Return Submission Procedures, DIIRSP. If you missed other foreign reporting forms, things like Form 5471 for foreign corporations or Form 3520, 3520A for foreign trusts, but don't have unreported income, this program may apply to you. Note that since late 2020, the IRS has moved towards treating these as reasonable cause requests rather than automatic waivers, so the outcome is less predictable than it used to be. IRS criminal investigation voluntary disclosure practice. This is for people whose conduct was willful, intentional tax evasion, deliberate concealment. It's a very serious program, and navigating without a qualified tax attorney is not something I could ever recommend. One thing I have to mention is quiet disclosure. This is when someone just starts filing the FBARs they missed or files amended returns without using any formal IRS disclosure program. People think it'll fly under the radar. It won't. The IRS is aware of this approach and has said explicitly that it may result in an examination and the full penalty regime, including willful penalties and possibly jail time. Don't do it. It's not a strategy. It's like a gamble, going to Vegas and throwing the dice, and hopefully you're not going to hit craps. You get bad odds. The willfulness warning. I want to spend a moment on something that trips people up because it's important. When you use any of these programs, you're making a certification to the IRS. And in some programs, you certify that your conduct was not willful. That's a legal statement made under penalty of perjury. If you certify non-willfulness, but the IRS later determines you were in fact willful, that you knew about the requirement, understood it, and chose to ignore it anyways, you're now looking at willful penalties and potentially a misrepresentation to the government. The line between non-willful and willful isn't always obvious to the person living the situation. Oh, I knew I had a foreign account, but I figured the bank handled the reporting, could be non-willful. I moved money offshore specifically to hide it from the IRS is almost certainly willful, but there's a wide gray area in between, and the IRS's interpretation of what counts as willful blindness has expanded significantly over the years. This is not a decision that you really want to make on your own. You can call us at Silver Tax Group. We'll help you through the facts with attorney-client privilege. If any of this sounds familiar, if you got foreign accounts, missed FBARs, unreported income, or you're just not sure which category you fall into, the most important thing you can do right now is get in front of a qualified tax attorney before you file anything. These programs have real deadlines and they disappear the moment the IRS makes contact with you. Acting now while you have options is almost always better than waiting until the letter shows up. My firm, Silver Tax Group, handles exactly these types of cases. We work with clients across the country and internationally on FBAR compliance, offshore disclosures, and IRS matters. If you want to talk through your situation, head over to Silver Tax Group or call us at 855-900-1040. Schedule a private confidential consultation. And please, if this video was helpful, please subscribe. I put out new content regularly on tax issues that affect real people in real situations. I'll see you in the next one.